Good morning. It is 4:15. Was that today's date?
No, today's April 14th.
Oh, today's April 14th.
Yes, and we are looking at yesterday's market from April 13th.
Right. Welcome to another edition of the Honeymoon Traders. I'm here with my wife Amanda. And full disclosure, we're not traders. We don't recommend any financial advice. Trade at your own risk. And we get that out of the way. And hun, we're looking at this 10-day chart here, and it's been gradually going up, the S&P 500, and I just wanted to show you that and the trend lines that we've been keeping. This trend line was touching here, and then I swung it out more after Friday, and then I swung it out again for Sunday and for yesterday, for Monday.
Why would you swing it out for Sunday? There was no market on Sunday.
But there was because Monday hadn't happened, and there was obvious trades at a certain level for Monday to give me my trend line, to give me a to give me my trend line assumptions of what might happen, you know, for Monday.
All right.
We'll see it when we zoom in.
Okay.
All right, but we reached a high on Friday of 28,281, and that's where I have the dotted line, the 281. Let me zoom in here. Uh, we'll do the 5-day, 15-minute. And on Friday, we had the high of 281 right here. That's the dotted line. And then the low on Friday was the 275. And the overnight low was, hold on a second.
Did you put those lows in? Those dashed lines? Did
I
you
I
create those?
I created the dashed lines, yes. And this other dash line is from, not really saying where it's from, but anyway, we put a low of 275 in on Friday, and we had a high of 281. So that's our range on Friday. And if you look at the overnight session, I guess we went almost down to the 270 mark for before Friday's open. That was the low of the overnight session. Okay, and so the just letting you know where the dotted lines, where all the lines are respectively, and the solid line is the 50% retracement, the 50% fib. Okie dokie. And as you can see here, I took this trend line and I put it to the Sunday's lows, and that gave me an indication of where the market's support and resistance is. It should be support. If it breaks this support from the overnight, then you're looking for more downturn. If it bounces off that support, then you're looking for an up. Is how I read it. And also, if you look at this 15-minute chart, as soon as we opened, we went to an extreme divergence, more sellers, less buyers, and the trend line, the white trend line, followed through with that divergence, meaning that there was more sell. The market was going down. Okay, and 1 day, 1 minute chart. Take it to this day's range, and here is our chart for 1 minute, 1 day.
For Friday, April.
For this is Monday.
Oh, this is Monday.
This is
Okay.
Monday.
Monday, April 13th.
Yes. As you can see, the DMI divergence happened as soon as we opened. We started trending down, and the trend line followed through with the with the divergence of the red and green, buyers and sellers. Okay. We're not really, I won't do the whole highlights show, but just to let you know that as soon as it broke the trend line from the overnight right here, and it came, broke it, tried to bounce back, broke it again, tried to bounce back a second time, and broke it for the third time, and was not, and failed. And I put this trend line to see where the follow through what would go, you know. And so this should have been right at this point. Well, you know, if we, I'm always scared to trade right at the open. I don't really know, the pattern of what it's going to do. But this right here should have been the indicator for your trade to go through. Definitely, definitely a put right here, and taking it down past the two, the lows of Friday's overnight session, or the morning session, was between the 272 and the 270. And so that's where you know where you were headed. Or that was, and if you put a put here, you knew your stop was at the 275 level, because it hit that several times and failed to follow through. And so if you put a put would have been done here, and your stop would have been at the 275. All right. I just want to do today a comparison. So here's a good trade. I mean, if you jumped in, you know, all in the morning, and you see that right away we're diverging and it's going to come down, you could have put a trade in right away, right? And then followed it all the way down to 272, 271 level. And so what I want to show is the difference in the money put and out of the money put. Meaning, in the money put, you could have bought a put at the 277 or 278 level,
Mm-hmm.
and then sold it here. Or you could have bought an out of the money put, a 270 or 272, 271 level, and sold it when it comes down here. So the difference in the amount of money for for in the money and out of the money is quite substantial. So here we have a 278 put, right?
All right, and let's clarify. This is a good place where we say, if you want to short it, if you know that the SP is going down, what you do is, if you're using options to increase the amount of takeaway and profit that you gain from this trade, you buy the option that is targeting the lower price. So you're talking about that
You're
lower.
either that's what I'm talking about, in the money as
Mm-hmm.
opposed to out of the money.
Mm-hmm.
If you bought in the money, what does it look like? What does your trade look like, as
So
opposed to
let's
buying
talk
out of
about
the
the
money?
option, the put
Uh,
option in the money. What price target is that?
so we're up here at the 277, 278 level, right? So
Mm-hmm.
if you bought a put, and that's going till 11:30, 11:15 in the morning. So if you bought a put at the opening,
So this is the options chart for the 278 put.
yes. Why can't I move over? Anyway, in the morning at 9:30, okay, because it's a one-day chart. In the morning at 9:30, as soon as the bell opens, you could have bought a put in the money put at 231. Okay, you see
Mm-hmm.
this, $2.31, and then you could have sold it at 11:15, 11 o'clock, for a high of 672. But really, you could have sold it anywhere in the $6, $6.50 range. Okay, and that's 2, 3, 4, 5, 6. So that's $4 of profit that you would have had per option.
There's a
Correct?
bit of a pricey option though, 231.
Well, you're buying in the money. That's right. You're spending more money to buy in the money, as opposed to out of the money, where that's what I'm going to show you next, is the 271 put
All
at
right. So that
9:30.
was the 278 put. This is the 271 at the same time frame at
Right.
9:45.
Now you're buying out of the money. out of the money is, how much is this? It's 35 cents.
Mm-hmm.
Out of the money, you would have bought this put out of the money at 35 cents. And you could, at 11 o'clock, at 11:15, you could have sold it at $1.50, $1.55.
So
But really,
5 times more value. 30 cents becoming $1.50 is 5 times more.
it's 5 times more.
Yes.
So which is the better?
The out of money put.
The out of money put would have made you more money.
Yes. If you had bought the exact same value. If you had bought $230 worth of 35 cents.
Oh, don't do that. Don't do.
That's how you have to compare
No,
it.
no. You could just compare 35 cents becomes $1.50, which is only $1.50, which is only $1.20 in profit. Correct?
Mm-hmm.
One option. We're only talking one option,
Yes.
not 200. Yeah. You could have. You spent $200 and something to make $4 profit, or you spent 35 cents to make $1.50, $1.20 profit.
Mm-hmm.
So yeah, you can't look. I don't.
So you spend $35 to make $120,
Right.
or you spend $230 to make $600.
Correct.
So one nets you $400, but you had a greater risk. You had $230 at stake.
Correct. Yes.
And one only nets you $120, but you had very low risk. You only had $35 at stake.
You only have to, right.
If you're wrong, you're only going to lose $35.
Yeah. Per option. Exactly. So it's all about risk and reward and what you're willing to risk, in order to make money in the market. But definitely the buying at that point, for that chart at that moment of time, you were definitely better buying it in the money than you were out of the money.
Well, I disagree. So you mentioned earlier that you're hesitant on that first morning buy, at 9:30. You feel like you don't really have confidence in your ability to read where the market is going.
Mhm.
So I would take the lower risk option. I would take the $35 risk, because that's what that lack of confidence translates into for me. It means reducing my risk. If I'm not that confident, why would I take greater risk?
Sure.
And you still win. You still make $120. And if you're paying close attention and you realize that the market is trending down for even longer, not just a morning pop, but it's really going to go down beyond that until 11 a.m. when you see the divergence once again, where the sellers really move in once again, and you have another opportunity to do it all over again.
Sure. Okay. You can look at it that way. Yeah. I'm just showing people, like, it really does matter where you put your money
and there's two reasons
for the most gain, for the most gain of your money, at a certain time.
Okay, what we're talking about is how to pick which option you buy. Do you pick the in the money because you want to make lots of money? Well, not if you can't afford to lose the bet. All right. And do you pick the out of the money if you're feeling insecure and unsure?
I'm not telling people how to trade or how to make. Yes. I'm just showing.
This is for entertainment purposes.
No, I'm just showing you the difference in the money option as opposed to out of the money options.
All right, let's
Sometimes
move on.
It makes sense to do the in the money options because it's greater reward for your risk.
Yeah, hindsight is 20/20.
Go ahead. You're right. Okay, and anyway, so we're running out of time, and I just wanted to point that out, the in the money trade as opposed to out of the money trade. So anyway, say goodbye, babe, and
have a good day, everyone.
Have a good day, everybody, and happy trading. Ciao.